What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's traded in the US stock market. So make sure you hit that like button if you enjoyed this video. It really helps the channel grow. Thanks again to all those who continue to tune in and give us a thumbs up. We really appreciate it. If you haven't already, make sure you hit that subscribe button and the notification button as well. That way you're alerted to when we release new videos. We do release bonus content from time to time, so you do want to be alerted to when we release those videos. Now, the nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings or what people call leap trades as well. So if you want a deeper dive into exactly how we set up our charts, make sure you check out that bonus content on our YouTube page. We've got a couple of videos that dive deeper into exactly, how we set up our broadening formations, levels of support and resistance, color coding for different time frames, things of that nature. So make sure you check that out if you want some more information about that. And if you want a free quick reference guide for the STRAT, which is the base of our trading method, you can find that in the description of our video. So I do encourage you to watch the full video. We do go over triggers and targets, but we give pretty good insight into price action on all time frames. So you do want to stay tuned in, stay till the end, and let's see what we've got for the agenda today. First, we'll recap the price action from Friday, January 16th. We'll zoom out like we always do to take a look at the week, month, quarter, and year price action. Then we will take a look at the market maker's expected move for the week of January 23rd, this week coming up. And then we will zoom back in to set the 4-hour triggers and targets for, the 4-hour markers plus our triggers and targets for Tuesday, January 20th. The week of the 23rd, and we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right, so let's go ahead and get to the charts. We're looking at the 5-minute first, like we always do. This is how we can take advantage of our proven and repeatable strategy to either get nice entries into scalps, quick trades early on in the morning, or to just get early entries into trades that will, last for the full day, right? If we get a trending day, definitely want to get an early foot in the door when we have those type of days to really capitalize on the movement that we get. So what we do is we map out the previous high a day, previous low a day, overnight high and overnight low. And then once price opens on that trading day, we mark the first traded price, what we call that the opening print. So the strategy is quite simple. If you get higher lows at or above the opening print, you want to get into calls, targeting overnight high, previous high a day, whichever is above. If we get lower highs at or below the opening print, then you want to look to get into puts. All right. So today we had basically a sideways day. There were a couple of opportunities for some scalps, especially if you were willing to take on a little bit of extra risk. There is some nuance that comes into our strategy, and you'll see that here in a second. But what we did is we opened and pushed up initially. Pushed into the gap and basically closed it, right? A couple of cents away from closing it. But we also ran into a monthly broadening formation in that gap. That's this green solid line that's going side to side. It actually does go from bottom left to upper right if we're looking from a zoomed out view, but since we are zoomed in, it does look pretty horizontal. But that is the monthly broadening formation. And you can see that we pushed down from there. We did end up getting a lower high, and now that was right at overnight high. That wasn't at opening print, it was right at overnight high. So this is what we were talking about as far as being willing to take on a little bit of risk, looking at the nuance that we've got going on here. If you were willing to, you could have entered puts here, right? Or I'm sorry, down here. Once we cleared the low of this candle here, locking this candle in as a lower high, right? We've got the high here, push down for a low. Now we've got the lower high right here. Once we break the low of that candle, you could have went ahead and entered here. Now we did get the higher low, but it was followed by a lower high. So that would have validated the entry. And if you were not willing to take as much risk as entering above opening print, here we have the lower high at opening print and the entry slightly below opening print, right? So definitely would have got a little bit more if you entered exactly when we went 2 down, locking this in as a lower high, but the entry wasn't too far too much far further if you wanted to wait for the safer entry. And we got that push down here to the 200 fib of the holiday bull flags. We personally took on a little bit of extra risk. If we take a look at the internals, let's bring that up for us here. We can see, the tick was at or below zero line for a good part of the, the first 30 minutes of open. The vol QD, so the money going in versus money going out, essentially was basically at the zero line, and the breadth was negative, right? So we went ahead and took the added risk. We went ahead and grabbed some puts at the first lower high on the 5-minute, wrote it down. We did take half of our position off at the 200 fib extension of that holiday bull flag, right? It was after the bounce, actually. After seeing such a big wick here, we were willing to let these go further. There was a good risk to reward to the downside, but once we saw this wick and how it bounced off of the market makers expected move high, essentially, and basically catching the body on this 200 fib extension, we thought we could be in for a different type of ride, and that's where things started to push up for at least a little bit for the internals, right? After 9, they pushed up a little bit. 9 o'clock, pushing up. So we did not enter calls at that point, right? We still have our February calls that we're holding on to in nice position. So we didn't enter any calls here. In fact, we were just looking for a lower high at or below opening print again. And we did get that on the 15 right here. So it took a little while. But we did get the lower high and we pushed down. We did enter or added to, I should say, the position that we already had. Thought that we might get a little bit more downside action, maybe come back down to the previous low a day. So we did enter more here, but then we were hit with, we entered here, hit with the higher low. And then as soon as we went 2 up on the 15, oops, let me make this bigger. I keep forgetting people are on phone. There we go. So here was our lower high. We entered as soon as we went below this 2, but then immediately got this higher low. It was followed by a lower high and this dip, but essentially we just moved sideways to the end of the day, and we ended up just selling the position. So if you're familiar with this channel, we don't go too heavy on Fridays, especially we've got the holiday weekend coming up where we'll have Monday off. So there can be a level of de-risking by people at the end of the day, and not to say that we think we're going to go up on Tuesday, but we just didn't want to have as much risk on the books short term that we do. So right, we've got those February calls and January 27th, January 28th, all that. So we don't need to really worry about trying to make a bunch of money over a 3-day weekend where there's just another day for some type of news or catalyst to send us either up or down. But right now I'm looking at this more as bullish consolidation up towards the highs. And that's really what we had today, is just a consolidation day. If we take a look at things from the 1 hour perspective, we did technically make a lower high. I'm sorry, 2 lower highs, but they were followed by higher lows. So just another indicator of consolidation, right? If you get the lower high, but then followed by higher low, lower high. Don't know if we've got a higher low yet, but at least for right now, we've got consolidation. The same thing comes into play if we're looking outside of just today, right? We had the higher high, followed by the higher low, then by the lower high, higher low, right? So that's just consolidation. The whole day was just consolidation. So we did get basically the gap fill here. We got, I think, 2-3 cents left before that gap is filled. But things are still looking good for a neutral to bullish perspective. If you're looking at the 1 hour, if we go to the 4 hour, let's get a better chart here. If we go to the 4 hour, again, just another consolidation day, right? We did poke up above the previous day's high, but pulled back in and then essentially just went sideways the rest of the day. So again, looks more like bullish consolidation. This is so here is wrong chart, that's why. that's what I'm looking for. So here was the holiday bull flag, right? This was December 18th, I believe. We pushed up, then went sideways into the end of the year. This is the breakout of that bull flag, but that just ended up giving us another, slight bull flag look here as well. So we've got the flag pull, we got the flag moving sideways for a couple of days, and then we've got, right, this is the high of that range, and then we've got the breakout from there. Or sorry, the breakout here, retest of the high of that range, and then the breakout again. So we are kind of extended from, the short-term push that we've made. Goodness me, what's going on with the charts? There we go. A little extended, but, there's still plenty of room to go to the upside. If we bring out a weekly chart, right? Again, we are up at the, let's go to the day. We are up here hitting this monthly broadening formation. But if we're talking about the April 7th bull flag, let's get a week chart up here that make it a little bit easier. There we go. If we're talking about, right, here is the flag pull and the flag from this April 7th low, right? We've had our pop out of that and created a rather large range, right, from essentially 30 to 50, so about a $20 range. We stayed within that for a few months, about since from October to December, and then we popped out of there, right? So definitely could continue to push up as an expansion of the range, right? Here is let's make it easy to visualize. Here is the range we were in. Oh no, what happened? Come on. There we go. Here is the range that we were in for about 3 or 4 months, right? And they say, once you break out of range, then you look to double the range, right? So if we take this, duplicate it, so it's the same range or same price range, yeah. If we go to the upside, then technically we should get up here to this $72, $73 level if we're doubling the range, right? Now, is there plenty of room here to pull back and retest this level and make it support before we get up to there? Yeah, definitely. But, the way things were looking over the past 2 days, especially after that gap up, just staying up and not, filling that gap, you would really kind of look at that as bullish consolidation, right? So looking good from, everything up through the short terms, still, neutral to bullish, neutral at worst, still looking bullish short term. But then, from the week up, right, this is bullish. We go to the month chart. Let's get a clean chart out here, right? This is bullish as well. We're in we just started an uptrend, right? November was a higher low, right? Here's that 2 down. And then we've gone 2 up from that, creating a higher low here and going higher highs. So starting an uptrend on the month, because we were coming from a downtrend, lower high, lower low, lower high, lower low. So we did change that around on the month, which is also reflected in the quarter, right? If you're familiar with this channel, you're probably like, geez, you're beating the dead horse here, but we've got this one combo 2 down, combo 2 up. Again, one of my favorite reversal patterns, and the magnitude of that move is the high of the candle to the left of the one, so that's up here at that 70.08 level. So again, looking real good on the higher time frames. And then if we go to the last time frame, the year, right, if you're familiar with the STRAT, you know what a 2 down, 2 up reversal is, especially when it's a failed 2 down like last year, 2025. Big failed 2 down, right? 2 down hammer. We went below the previous year's low, but we pushed back up, closed above where we opened in this nice hammer candle pattern, and we've gone from 2 down to 2 up, and the magnitude of that move is the candle to the left of the 2 down, which again is at 70.08 level. So that continues to be the magic number for us, and we're pressing pretty hard to get there. I talked about how once we got to this gap, filled the gap, and started pressing this monthly broadening formation, we should look for, if not a pullback, sideways action. I talked about that in previous weeks, and it looks like that's what we are getting. So we'll continue to monitor the situation and, continue to make triggers and targets on both sides of the equation, especially for the shorter time frames. Take advantage of any drawdowns that we get, selling calls, buying puts, and then being able to get nice entries in the next, for the next push up, right? So the next thing I would want to do is talk about the market maker's expected move. If you're not familiar, and that's for this week coming up. If you're not familiar with that, you can see here on the chart we do have market makers expected move high up here at 59.57. The low is down here at 48.33. But you can see how we got up to that level. It doesn't mean we have to just reject there and come back in. We can move sideways at that level, but you can see we basically hung out at that level at the highs of this week. So let's get into the market makers expected move for this week, or for this coming week. To do that, let's go to the options chain, and I've just got Thinkorswim here, right? If we look at the options chain for January 23rd, if we go over to the right hand side, we've got a number in parentheses, plus or minus 5.723. What that means is the market makers expect a plus or minus $5.72 move, right, next week, or the week coming up, January 23rd. Which is a decent sized move considering, you know, the markets will be closed on Monday for Martin Luther King Day, right? So if we go back to the main chart, or sorry, go to our notes, right? We've got here for Tuesday, January 20th, there will be 240 trading days left in 2026. The close on Friday, January 16th was 60.75. We know that the month, quarter, and year all flip red at 45.13. Don't know what this coming week will flip red at. Let's actually change this because the week has not opened yet. But here we have the expected move charted out, or putting in our notes. So it's plus or minus $5.72, excuse me, from the close price of 60.75, giving us an expected range of 66.47 to 55.03. Like I said before, we almost closed that gap. I guess there's 4 cents left in the gap. So there is still that above, but then we know that we've got our gaps below, including the gap that was made overnight Wednesday into Thursday morning. And but the main thing that we're talking about here is that range. So let's go ahead and get that charted out here on the charts for us. 66.47 is the high, and I should have done this prior to the show, but hey, it is what it is. 55.03. Market makers expected move low, 55.03. All right. So we can see that this would imply, you know, that the move next week would be up, right? If this small dashed line right here, this is a Fibonacci of last week, or this past week's price action. The only thing is I have the 100% fib, the 50 fib, and the 0 fib. All the rest are off of there. So if you're familiar with this channel, you know how we like to keep track of the previous week's 50% level. And that's the main reason why we keep that up. But it also lets us know if we're looking on a smaller time frame, any time frame smaller than the 1 week chart, we know where last week's high and low were as well. And that would show us that, you know, the market makers expected move low for this coming week would not make us go 2 down on the week, even if we reach the market makers expected move low. Now we can always go through that. It's about a 70% chance that we stay within the market maker's expected move, but that would imply that, you know, we're not going to go 2 down on the week, and that we should go 2 up on the week, right? Continuing the movement upwards. So that's how we keep track of our market maker's expected moves and what they kind of mean to next week's price action. So let's go ahead and zoom back in here, so to the 5 minutes, so we can talk about Tuesday's price action. Again, market is closed on Monday. Let's get the right chart up here. There we go. So if we're looking at, you know, again, taking advantage of our proven and repeatable strategy, we want to make sure we have our proper levels mapped out. Let's just, since we don't know what the overnight high, overnight low will actually be, let's just set these up here as imaginary levels, but we do know that previous high day and previous low, what the previous high day and previous low day were. So we do have those charted out here up at the top of the chart and the bottom of the chart. Again, overnight high here in this light blue level, overnight low in this light blue level here. And let's get the right tool out, and let's say that we, you know, open on Tuesday somewhere in between that overnight range. What that would mean is we, again, are looking for higher lows at or above opening print to get into calls, and lower highs at or below opening print to get into puts. So if we open here and we push up maybe get a little bit of upside action at open, but then, pull back, but ultimately get a higher low at or above opening print, whether on the 5-minute, 15-minute, whatever, then we want to look to get into calls. And you want to exit those calls at overnight high, or maybe scale out at overnight high if you'd like. But then previous high day is the ultimate target for this particular strategy, right? Now, if you get to that previous high day with momentum, we keep pushing through. Okay, we can flip to our notes for our triggers and targets for the 4-hour and 1 day and whatnot. But for this, strategy, scalping strategy early in the morning, or early entry strategy into, longer day trades, what we're looking for is higher lows at or above opening print to get into calls. Now, at the same time, if we open and we push down, maybe we set some type of low and we push back up, but we get a lower high at or below opening print, and we want to look to get into puts, again targeting overnight low and previous low a day. Right? It's real simple. As long as you stick to the rules, stay disciplined. Yes, you may take a small loss here and there, but more often than not, you either stop even or you're profiting. So I'm not going to sit here and guarantee that you're going to make money every time. Yes, I've taken losses as well with this strategy, but if you keep your risk to reward, at the very least 2.5 to 1, 3 to 1, 2 to 1 gets a little bit more risky, but I like to keep mine at 2.5 to 3 to 1 reward to risk, and as long as you take a small loss, your wins override those. It's pretty simple. So just stick to the rules, keep good risk to reward, and you should be good to go. Now let's zoom out a little bit more. Let's take a look at the 4-hour and just look at how we might approach a more of a day trade, maybe even overnight swing trade. Right? We can see that Friday's price action on the 4-hour chart gave us a 2 and then a 1. A 2 up and then a 1. Now that 2 up was technically a failed 2 up, right? We closed below where we opened, but it was, and so that makes that candle red. But again, it was a 2 up, so we just got to again continue to kind of take this as bullish consolidation, especially since the inside candle did close higher than it opened. And it just stayed in, basically in the middle of that range. It's just kind of the definition of consolidation. So if we do get price action to the downside in that first 4-hour candle on Tuesday, that would give us a 2-1, 2 down, right? Entry would be at the low of the 1, and the exit would be at the low of the day on Friday, or a previous low day, I should say. Right? So not a whole lot to be had there. If you get exact entries and exits, you've got about $1 to work with. So, if you've got multiple contracts at the money or in the money, you should be good to make it's still a decent amount of profit. But it's essentially the same to the upside, right? If we go to the upside in this first 4-hour candle of Tuesday's action, that gives us a 2-1, 2 up. Obviously, entry at the high of the 1, exit at the high of the 2, right? Which is last week's high as well. That does coincide with that monthly broadening formation line again as well. So, again, it doesn't mean we have to reject there, but if we get up there again, look for some more sideways action, bullish consolidation before we make a further push to the upside. But again, keep in mind that we've been on a pretty good push over the last week and a half, so it's perfectly reasonable to get a pullback. All right. Now, if we look at things from the day chart, let's get a better chart out here. There we go. We did have that essentially failed 2 up on Friday, right? We still went 2 up, but we closed below where we opened, and we closed back in the previous day's range. So, neutral, bullish consolidation though, because it was in the upper 50% of the previous day's range. But yeah, that's where we stand on the day. So if we get action to the downside, that does trigger a reversal, a 2 up, 2 down reversal. Obviously, entry would be at the low of the 2. Low of this 2 up here from Friday, and the exit would be the low of Thursday's price action. That does present us with an opportunity for a gap fill as well, and the retest of last week's 50%. So if you wanted to, just scale out a part of your position there to lock in some profits, especially if we've got some momentum, or if we're just, going sideways, looking like maybe some, bear flag type of action, you could also set yourself up for the gap close. So, it's decent sized move that could happen to the downside, because if we poke into that gap as well, you're not only just looking for the gap close, because technically that would trigger a 2 up combo 2 down. I'm sorry, combo 2 up 2 down, right? If you go below this, now you're looking at this candle and this candle as a 2 up from this candle, right? Making this a combo 2 up, combo 2 down, and the magnitude of that move would be back down to the bottom of that 2 down that we had on Wednesday, all the way back down here at the $53 level. So you could get kind of a domino effect situation going on there. People taking profits, gap closing, things of that nature, retesting last week's 50%. Market makers expected move low is down around here, so don't expect it to just plunge through there and really test last week's low, but you never know what we can get as catalysts. And again, we've been on a pretty good run, so pullback, people taking profits from, just this move alone could be understandable, right? There's still people that, we could still be taking profits from this pop out of the range as well. So, just keep an eye out. If we go to the upside, again, it's just a 2 up continuation. We've got to fight through, obviously, this monthly broadening formation, last week's high. But market makers do expect the move to go higher. So, again, we've got the clear entry at the high of Friday, but not a clear exit, right? Because it's not a reversal, so we don't have another candle sitting over here that, okay, we exit at this high. So we've got to rely on our horizontal levels that we've got out there. Obviously, this is 161.8 fib of the November 2025 range, which is that November 2025 range has really come into play over the last few weeks. We've also got the 200 fib extension of the bull flag from the April 7th low as well, before we even get to the market maker's expected move high. Or the last year's high as well, up here at 67.39. So, we've got some momentum going to the upside, but just be aware, people can take profits, and as long as you're positioned properly, triggers to both sides, then you should be able to capitalize. All right, let's go ahead and look at the notes here. Done a lot of looking at charts. Again, we went over the expected move. We know where our gaps above and gaps below are. Always want to keep those in mind. We know from a scalping perspective, we're just looking for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. We talked about on the 4-hour time frame. If we do go to the downside, that triggers a 2-1-2 down, triggering at 60.43, magnitude of 59.50. So again, a little less than $1 movement, so decent size movement. But if we do hit that 59.50 with some momentum, we do have the extended targets listed for you here as well. To the upside, we would have a 2-1-2 up continuation, triggering at 61.17, magnitude 62.19, so about another $1 there as well. But we do have the 62.23 as the gap close, so that's up in that level as level there as well. And then we've got some extended targets out here for you also. On the day chart, if we go 2 up, 2 down, that, again, triggers a reversal. So we've got a very clear entry, 59.50, very clear exit at 58.01. We are in an uptrend, so just keep that in mind. But if we continue to press down, we get that combo 2 up, 2 down that triggers, and we're looking for 57.27 as the next magnitude for that move. And we've got some extended targets listed out here for you as well. We could come into Tuesday's price action already at, the magnitude of the move or the first target, right? We've got a 3-day weekend, so we just got to keep that in mind. So we did want to have a couple extra extended targets out there for you. If we go to the upside, again, it's just a 2 up continuation. That triggers at 62.19. Targets are 63.32, 64.75, and again, 3-day weekend, so we could have a pretty decent catalyst where we could be opening, gapped up or whatever. So we've got a third target out here for you of 65.11. We'll stay with the notes here. We've done enough charts on the week for the week of January 23rd. If we go to the downside, that would trigger a 2 up, 2 down at 52.35. Now the magnitude for that move is pretty decent at 48.13. Right, that would drive us below, obviously, the market maker's expected move low if we do trigger that. So kind of it would have built a lot of momentum at that point. So getting down to that 48.13, could be a real possibility there. 46.79 is the 50% of 2024, which has been the major support and resistance since October. So we would definitely want to keep that in mind where that is at. But if we go to continue to the upside, we're just triggering that two up continuation at 62.19. I don't know why we have these targets on here still. That's from last week. 62.23, obviously not much magnitude there, but that is the gap close. So you just want to watch out for the gap close reversal. But if we continue to push through, we've got 65.04 and 66.76 as the targets for the week. On the month, we've talked about how we triggered this 2-1-2 up at 50.09, already reached magnitude at 50.19, but again, locked in November as a higher low, and we've now made a higher high, getting past this magnitude of 50.19, and really just working on our way up to that gap close again at 62.23. 63.94 and 65.04 as well were our extended targets, right? These were the ones that we already had out here. We would go ahead and add that 66.76 on there as well if we keep pushing. But you know, that 70.08 seems to be calling, so we could get past that 66.76. But the market makers do expect that we should end somewhere around there for the week. So we'll see. We'll add some more triggers and targets here as we get into next week's price action. Should we continue to push to the upside really strong, right? On the quarter, we talked about how we triggered that one combo 2 down, combo 2 up at 50.76. Again, gap close was the first target. Then we've got 65.04, 67.56 as well before reaching that ultimate magnitude of 70.08. And then lastly on the year, we've triggered that 2 down, 2 up at 50.76. Magnitude is 70.08, so that's again the magic number we're looking for. If we reach that with some momentum, 74.21 is all-time high for SOXL, and be definitely within reaching distance right there. $4 isn't much for SOXL to go. It can do that in a day, so just want to keep our eyes on that. We will get into some extended targets. We're going to do an extended video this weekend talking about what we're looking for once we reach that all-time high territory. Should we reach it, and can you continue pushing, which it seems like we should with all of the momentum that chips have right now. You know, TSM obviously reported great earnings. Micron, I think they just started building a new foundry. But you know, memory shortage of memory chips is, you know, a big thing right now. So it doesn't look like chips are really going anywhere, but we do need to have a plan of attack for blue sky territories, right? It's a lot easier when you're trading within a previously traded range to have targets. It's a little bit harder when you're trading in blue sky territories that have never been traded before. You don't have those levels to the left that you can look off to and say, okay, this should be our next target here. So we'll get into another deep dive video this weekend. So keep your alerts out there for that, and hope everybody will enjoy that video as well. But as far as this video is concerned, we'll go ahead and wrap it up at this point. Try to jam in as much information as we could without taking up too much of your time. So hope everybody enjoyed it. Those are your triggers and targets for everything from a scalping perspective all the way up to the one year chart. Again, if you did enjoy this video, it's a free video. The only thing we ask is for a free like. Again, it really helps the channel grow. Appreciate those who continue to do it. We also encourage, you know, people to get into the comment section, you know, ask questions, you know, give suggestions, things of that nature. We've, you know, made changes to how we do our videos based off of people's comments. You know, we want to accommodate as many people as we can, because our main goal out here is just to spread this information and try and give people a better base in their trading to become more consistent. You know, this trading method can be used with any ticker, right? Not just SOXL. So again, we just want to try and equip everybody to do the best they can out there in the market. No membership fees or anything like that. We just want to try and do our part for humanity, we'll say. Anyways, we'll go ahead and end the video here like we normally do. If you're watching this Friday or Saturday or Sunday or even Monday at this point, we hope you get some good rest and you wake up refreshed for Tuesday morning, ready to trade. If you were watching this Tuesday morning or Tuesday during the day, we hope you had a great weekend and got some great rest and woke up refreshed this morning. And we look forward to getting out there and trading with you.